Welcome back. Trading activity soaring across Wall Street as capital markets and deal-making drive major bank earnings this quarter. Bank of America topped expectations with stronger investment banking revenue, reporting its 14th straight quarter of gains for capital markets. The global markets division posting record third-quarter results on robust client activity across equities and credit products. The unit reporting $6.2 billion in revenue and $1.6 billion in net income. Joining me now, the man who runs it in a Fox Business exclusive, Bank of America's co-president, Jim DeMare. Jim, congratulations on being named co-president number one.
Thank you. Good morning. Thanks for having me.
Yes. I mean, look, when I saw the news that Brian Moynihan named you co-president, I thought, okay, well, maybe there's a little horse race being set up here in terms of who is going to replace Brian Moynihan when and if he decides to step down. Is there a timeline in place? Can you tell us anything about that?
Well, Brian's given, pretty clear guidance. He expects to be here through the end of the decade, so I'm going with that. When you think about it, we're a big company. We have a lot of businesses. Brian always talks about 8 lines of business. He needs some help, running those, and he gave Dean and I the opportunity to do that. So we're pretty excited about it. We think that there's, a lot of good trends that we can continue to accelerate.
Well, congratulations to you. And of course, you are driving the global markets business, which continues to outperform. Yep. I want to get your take on what's behind this. This is 14 straight quarters of growth in global markets. What can you tell us?
Yeah. I think there's a couple of things to think about. One, we've been making investments in the business, whether it's people, whether it's balance sheet, and then, there's simple execution. You have to be focused and drive, returns and be focused on your KPIs. We have spent time investing in our rates business with people, new leadership. We've been doing it in the equities business as well. If you really look at it, what's for this particular quarter and where we've really been accelerating the last 2 to 3 years is in our equity, our global equities business, which is doing very well, and we see continued opportunity there.
And the global equities business, of course, really a part of a reflection of what's going on in these markets, right? I mean, how are clients positioned right now heading into year end?
Yeah, I think that there's a lot more discussion around what the fears are, but if you look at how the market is positioned, there's more of a fear of missing out than the fear of loss.
Yeah, that's a good point.
Now, it varies, across sectors. There are sectors that are doing incredibly well, others that are, doing less well. If you look at our survey for fund manager survey that comes out of Michael Hartnett's research every week, cash is at an all-time low as far as the holdings, bonds are at all-time low and as far as holdings, and it's also a high as far as equity holdings. And if you look at it, people, the concerns are, kind of the same. People asking questions like, is gold, overdone? Is that a crowded trade? What's going to happen with AI? Are these companies going to be, profitable? And then the other one, around credit, as there's been a few stories in the past week about credit deterioration or fraud.
Yeah, I want to ask you about that because Jamie Dimon keeps bringing this up and saying, look, this is an indication that things are vulnerable and we could see an issue as a result of credit. Now, this turmoil follows the announcement of these 2 companies, First Brands and Tricolor, filing for bankruptcy protection. And Bank of America's syndicated loans to First Brands are secured by strong collateral, you said. What can you tell us about that? Because people are worried about who is exposed to the auto sector and those bankruptcies specifically.
Yes. Well, with First Brands, our exposure was not large, and we've discussed that. Yes, we're lead on that facility. It's going to work its way through. It's restructuring, as you would expect. As far as when you get into, to Tricolor, there's a lot of stories that are coming out every day, alleged fraud. We'll see what happens. We weren't part of that. I think the important thing to know about that one is, it was to lower credit score borrowers, and it's a different profile. But again, we're not close to that one. But I think, more information will be coming, in the coming weeks.
So it sounds like you think this is minimal exposure for Bank of America.
Oh, without question. Yeah. It's not that type of borrower that was in, Tricolor is not the borrowers that we service or lend to.
Now, you've got a great story here in the quarter, obviously the third quarter with the growth in global markets. But I spoke with someone the other day who was telling me, look, Marie, we got a big IPO that we want to take. We got a big deal that we want to do. And, all these things are now on the shelf because the Securities and Exchange Commission is closed. So what happens in the fourth quarter with this government shutdown?
Well, I think that's the question. If we can get it resolved by then, these IPOs that have been on hold, will will accelerate. We'll have it. They will happen. If you look at the third quarter, it's been one of the most prior to the government shutdown. It was one of the most robust quarters that we've had in multiple years. And if you go beyond just IPOs, block trading and equities, at one of the records of activity in the third quarter of this year relative to the past few years. So there's, I want to say, excitement, and there's interest.
People are worried about valuations given the phenomenal performance we've had of these markets. And
Yes.
incredible to me that the markets do not care that the government is shut down. It seems like it's not a factor here.
It's pretty incredible, the resiliency there. I don't know if it's the belief that it's going to be resolved relatively quickly. I can only lean towards that being the probable reason, but it hasn't dampened people's enthusiasm for what they see as opportunity, investment that's happening in technology, manufacturing, opportunities in the pharmaceutical and biotech space. So people are still pretty constructive.
Yeah, constructive is a good word. Is there a lot of money still on the sidelines that you think could work its way back into equities?
I think equities still are, an attractive alternative. Credit spreads are at all-time tights. If you look at the U.S. as an example, in investment-grade credit. So when you look at where there is opportunity to outpace, whether it's still relatively low inflation, that's one of the few places that you can do it.
I want to get your take on rates because, of course, you've talked about the rates business in the past when we've talked before.
Yeah.
We had Stephen Myron on this morning,
yes.
Fed governor, and he gave us his expectations in terms of rate cuts. Here he is. Watch this. Even Fed Chair Jay Powell signaled that the Fed is on track for another move. Are you expecting it's 25 basis points? Should it be 50?
Yeah, well, my view is that it should be 50. However, I expect it to be an additional 25. And I think that we're probably set up for 3 25 basis point cuts this year for a total of 75 basis points this year. But I think that, look, it would be really helpful to have the economic data in order to be able to make the decisions we need to make. Certainly, we would want to be inspecting the economy for signs of moves lower in inflation, for signs of changes in the job market. But without those data, we still have to make a decision anyway. And so we'll have to rely upon our forecasts for doing so.
Yep.
So 3 rate cuts of 25 basis points apiece consistently in the coming months, 75 basis point cut. How does that affect the rates business?
That is ahead of what the market's expecting, right? So that
would be better than expected.
That would be significant. Expectations are for the curve to continue to steepen with short end coming, down in rate level. So, the anticipation is there. I think a positive yield curve is better for the economy. It's better for, the markets. So I think all those would be positive. I also think the thing is, even though rates are lower on the long end, let's use the 10-year note as an example, then when we came into the year, a lot of small businesses and medium-sized businesses don't access the bond market. So lower rates on the front end, and most of those borrowers have floating rate loans. So that would be very constructive, I think, for small and mid-sized businesses.
Yeah, sure. And you've got the lock on the small and mid-sized businesses in terms of lending. So that would be a real positive for B of A as well.
Yep.
The yield in the 10-year now at 4.01%. Does it surprise you, Jim, that not only are we seeing this euphoria in equities, but you're also seeing euphoria in gold?
Yes.
Right? I mean, look what's going on in commodities like gold and silver. Gold just passed $4,200 an ounce, first time ever. What are you seeing there? And are you seeing client activity toward commodities?
Yes. Still strong interest in commodities, I think, for a couple. Commodities overall, gold in particular, especially for protection against currency debasement globally. So not just the U.S. dollar getting weaker, but quote unquote fiat currencies, getting weaker. Also as an inflation hedge. I think the thing to keep in mind is that for the prior 2 years, global central bank purchases of gold were double what they were the prior 2 to 3 years on a per annum basis. So you have more, fundamental and technical support. And I think on the markets, investor side, they've been coming in later to that theme.
By the way, the president is going to take a portion of Fannie Mae and Freddie Mac public. I know that many firms have been meeting with the president,
Yep.
you as well.
Yep.
Bank of America, Citi, JP Morgan all want this deal. Are you expecting to be the lead on that deal?
We're trying.
You're trying.
It's a big opportunity for the government, for the U.S., and obviously Bank of America being part of that is an exciting thing. We don't have any information on it yet, but we're optimistic.
You don't want to break news right here?
No, I can't. I don't have it to break.
Yeah. What about the China story? Do you worry that China aggression is spiking again on the trade front?
It's being watched. I mean, we're following the same news that you're supporting and coming from other parts of the market. We're watching it.
All right, Jim. Great to have you this morning. Thank you so much. Jim DeMare is co-president of Bank of America. We'll be right back.